Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day, as always. And today we're going to be talking about 3M stock. So 3M probably needs no introduction. They're the company with 50,000 patents or something like that. They are a dividend king. So used to be actually a fan favorite among dividend growth investors. I think now maybe a little bit not the case, but we're going to talk about it here today. And the company is actually trading at a valuation haven't seen for a very long time. I'm talking you can see around 2013 was the last time you saw it. So 10 years ago. So you had bought this company 10 years ago. Your entire return had been from the dividend. Now, right now, it is boasting a strong dividend in excess of 5%. Why? Well, there's a lot of risk, litigation risk involving earplugs, forever chemicals, etc. And a lot of people are thinking, well, what are the implications of this? Even going as far as to say the company will go bankrupt. Well, I'm going to push back on that. I'm going to say no. I've talked to the community about this quite some time, and now I'm going to be talking about here on YouTube, kind of sharing my thoughts here with you guys. And really, what I want to emphasize is, no, that's not the case. Most of the time, what you're going to end up seeing is a master limited settlement, right, within these industries with the government. The government wants its money. It doesn't want to bankrupt you. I want you to walk through that exercise and kind of think about it for a second. Would the fines be so big that they'll just get nothing because the company's just dead? And or would they want to milk it out? They're probably going to milk it out. And similar to what happened to the cigarette industry, what happened recently to the drug distributors, that they just reached a master limited settlement. I forget if it's I know it's in excess of 20 years or something. And McKesson, AmerisourceBergen, Cardinal Health, which used to be an investment of ours, all made that settlement along with some other players. Now, I'm going to remind you, because I just mentioned Cardinal Health. That was a position we had, and we made a lot of money in it. That was a 2021 position going into 2022 and helped out boost and kind of hurdle our performance towards the beginning of the year, really kind of jumping off the backs of, let's say, that certainty now, that respite that the stock was able to acquire after the settlement agreement, because the market just doesn't like uncertainty. The business was still booming. The business was still doing what it always did. And coming around right up until 2022, there was a lot of uncertainty around the settlement of the opioid pandemic, right, or epidemic. And the other players, same thing, right? If you actually take a look at the performance of this company, I can show you right there. You can see that throughout this time period, it was dead money. I believe that 3M might exhibit a similar price performance. And if that's the case, right, if that is the case, then a patient investor will have time to accumulate the shares that they did. Now, with Cardinal Health, if you guys have been following the channel for quite some time, we bought it kind of towards the end of that uncertainty in 2021. So we actually had, I guess, maybe more fortunate returns than someone who was accumulating all the way through, but you still got the same raw percentage returns. It's just, time weighted would be a little bit different. And I would kind of caution against trying to do that and saying, I'll wait for it. And, you're not really gonna, I don't feel like that's fruitful. And that just so happened to be that I started paying attention a lot to Cardinal Health more, as in, there were other opportunities I didn't really see. And then I saw this company. I was like, there's a great opportunity in this one. But you could have seen that same exact opportunity in 2020. 2019, go on and on and on. And you would have been right. The same opportunity was there. It just took some time to play out. And this is the patience component of investing. Now, 3M might exhibit a lot of those same characteristics right now. There's a big lawsuit that we don't know the consequences of right now. We don't know what's going to be the settlement or anything like that. All we know is that we have a business here. The business looks good. Up until 2018, this business was beloved. If you guys were investing back in those days, you guys might remember how amazing 3M was and how safe it was for dividend growth investors. All of a sudden now, that story is completely different. Everyone's running for the hills and dumping the stock. You're getting at a valuation that you could have gotten it 10 years ago. I'm just going to repeat that information, 10 years ago. So sign me up. Maybe, probably. And I'll tell you right now, I kind of flirted with having 3M in the portfolio last year a little bit. But now I'm actually considering building it out now with this valuation. And I think that I'll have time to accumulate. So what I'll probably be doing is building it out slowly over time. Now, kind of going over some of these key points, they are they have a decent amount of debt, about $15.9 billion. And if we actually see the cash on the balance sheet, 3.8. So very good, solid, leveraged business, right? It's not too leveraged, it's not too little leverage. It's using just the right amount of leverage in the business. This business has been around for a very, very long time. Their story is actually really interesting. They started as a mining equipment company, and then they kind of expanded into all these other products. It's quite crazy. And they're from Minnesota, by the way. So not many companies are actually from Minnesota. But all in all, like this company, I don't really see the products that they do sell, the business line that they're in, kind of going anywhere anytime soon. So I feel like I have the opportunity to accumulate a high quality business at a fantastic price with no risk. There is risk involved. And depending on how bad that settlement agreement is going to be, it's going to basically reduce the terminal value of the business, because you're going to have to adjust all those metrics, all those projections on your cash flows. Kind of my assumption is it's not going to be as bad as people think. It's probably going to be stretched out over maybe the course of several decades that they're going to have to pay out. And yes, it doesn't deserve the valuation it once did, because that does reduce the terminal value of the business. That reduces all the cash flows out into the future. So we have to be cognizant of that. Now, that being said, I think the valuation here is attractive. Now, how attractive is it? Well, I'll kind of show you. So this is kind of what I have penciled out. Ignore the 20%. Don't even pay attention to that. Kind of pay attention to the 9-7-ish%. So this is kind of in the range where I'm actually looking at it. And after making certain necessary, automatic adjustments, it basically comes out to that right now we are at, I would say, fair valuation relative to like the risk that is present. If it gets down even lower, I feel like that would be perhaps, close to, I'm hesitant to say steal, but yes. Now, the thing is, if it gets extremely bad, as in I'm wrong and the government wants to bankrupt this company, wants to make a lesson out of it, and doesn't really want the money themselves or for the victims, it just wants to destroy the company, then forget what I'm saying here, because I guess that is a possibility. I just don't think it's a likely one. So all that to say, don't be surprised if you see this company in my portfolio in the near future. And I'd be excited to kind of build it out and kind of get my dividends from it for the foreseeable future. Again, 10 years ago is when you'd have to wait, or you'd have to go back in time 10 years ago to acquire it at a similar price. So kind of crazy like that. All right, with that being said, thank you guys so much for watching. And if you guys enjoyed this video, let me know by hitting that like button. Also, subscribe if you're not subscribed and you want to see more content like this. And I will be seeing you guys on the next one. Bye.